What's up everybody, I am Jaspreet Singh and cryptocurrency has been on a one-way roller coaster down. Back in November of 2021, Bitcoin was at around $67,000 a coin. By January, it had fallen to around $47,000, and then by June, it had fallen to even below $30,000 a coin. Along with that, you have some of the biggest investors out there talking about how Bitcoin and cryptocurrency have no value. Even Warren Buffett said that he wouldn't want to own any Bitcoin. However, one big name, Jamie Dimon, the CEO of JP Morgan Chase Bank, did change his mind on Bitcoin, because now he says that not only is Bitcoin a good investment, but he says that it's undervalued right now. And now in this economy where the Federal Reserve Bank is raising interest rates and asset prices are getting hit hard across the board, and now we have worries of a recession, you might be wondering, what does all this mean for crypto? There's three things that you want to pay attention to, and these are the three things that I'll be talking about in this video. First, I'll be talking about exchanging cryptocurrency, because we have new regulations coming in with cryptocurrency, and now with potentially some exchanges going bankrupt, you want to know what that means for your cryptocurrency. Second, I want to talk about the technology with cryptocurrency, because now we're seeing some cryptocurrencies evolve in their tech and what that means for you. And third, I want to talk about the use case with crypto, because now as more and more people are starting to adopt crypto, what does that mean for the future of crypto? So let's start by talking about this, the exchange of crypto. In the first week of June, we saw a new bill proposed which would regulate crypto, and the goal of this bill is to make people safer when they buy and sell crypto. Now, there's really two issues that you have to understand when it comes to exchanging crypto and people worried about losing their money. One has to do with the actual coin. The second has to do with the exchange. Let me start by talking about the coin, because the fact of the matter is there are some crap coins out there. In 2022, we've already seen some coins go bust, and this has led to the loss of a lot of money, because now you hold a coin thinking that it has value, thinking that one day it's going to make you rich, and now this coin is worthless. Part of this has to do with the fact that there's not that much oversight over crypto, and so if you are a developer and you don't have good intentions, you can create a coin and create a whole bunch of hype around it to create a pump and dump scheme, and this can cause a lot of people to lose their money. Couple that with the fact that over the last couple of years we had super low interest rates and a lot of free and easy money flowing out there, so people were putting places to throw their money, and some people were looking for easy ways to get rich quick, which fueled some of these bubbles. And so there is a good chance that we will see more of these crap coins fail. So if you are investing in crypto, do some research on what you're investing in. Make sure you're investing in something that you actually believe in, something that actually has value, and something that's producing a real technology that could have use in the future. Because now, as the monetary policy changes, as our economy changes, as this free money starts to go away, the crap coins will fail, and that will create more volatility for even the good ones, but it'll create opportunity for the good coins if you believe in cryptocurrency. And this brings me to the second side, which is the exchange side, because now as we're going through this down cycle in cryptocurrency, well, that's hurting a lot of crypto brokerages, because just like what we saw happen in the crap coins, we saw insane valuations of tech companies. One type of these tech companies were the crypto exchanges. Well, these crypto exchanges saw huge valuations in 2020 during the pandemic, in 2021. So they were able to raise an insane amount of money, thinking that they'd be able to grow very quickly. And now many of these companies, including the bigger exchanges like Coinbase and Gemini, are downsizing, because this is their only way of now staying in business. This is where I really want to give you a warning, because these crypto exchanges are not banks, meaning they are not FDIC insured. So if one of these crypto exchanges are run badly and they go bust and they go down, that means that you could lose all of your crypto assets at one of these brokerages. This is why you do not want to keep your crypto in one of these brokerages. You want to take it out, move it into a wallet of your own, something that you own. That way, if something bad were to happen to one of these brokerages, one of these exchanges, you are protected. Because if one of these brokerages start to go down, you can bet that there would be a run on the brokerage, kind of like a run on the bank, but you can't call it a run on the bank, because these brokerages, Coinbase, Gemini, FTX, these are not banks, these are exchanges. And so you want to make sure you protect yourself, have a wallet. I use something called Nano Ledger. It is a cold wallet, meaning it's a USB drive. They're not paying me to say this. It's just where I keep my crypto. That way now it's completely off the cloud. It's off the computer. I own my crypto and I own it in my own drive. If you don't want to store your crypto on a cold wallet, which is a USB drive, then at least use a hot wallet, which is something on the cloud. That way at least you're not keeping your crypto in one of the exchanges. Because personally, I'm just going to give you my personal opinions here. I am more worried about some of these brokerages than I am about potentially Bitcoin or Ethereum. Yes, I think that the crypto market could be hit very hard as interest rates go up, as you see more of the bad cryptocurrencies go bust. It's going going to affect the entire market, because when bad assets fail, it causes good assets to go down as well. So I understand that. However, these exchanges are how most people are buying and selling cryptocurrency, and if they start to go bust, it could cause a lot more panic. It could hurt cryptocurrency. However, I believe in the long-term value of crypto and some of these blockchains. Again, not all of them, but some of them, which is why I am still investing my money in there, but I understand the risks with these exchanges, which is why I really want you to understand that. Now, I do work with certain exchanges. Like I work with FTX. They are a sponsor of this video. The nice thing about FTX is right now they're not doing layoffs like many of the other exchanges are. Now again, I'm going to be fully transparent with you. This can change in the future, but you should use an exchange as a way for you to buy and sell crypto instead of as a way for you to hold your crypto. Now, I like FTX because they make buying and selling crypto super simple. Like you can buy Bitcoin, Ethereum, whatever crypto that you want with just a couple buttons, and then you can dollar cost average your cryptocurrency. Like what I do is I buy Bitcoin every single day. I'll buy a little bit every day. That way now whether the market's up or down, it doesn't matter. I'm just accumulating and buying more Bitcoin. And you can do that very easily with FTX, and they also have very low fees. Because now if you compare the fees with FTX US with a lot of the other major brokerages, you're going to be paying a lot less in fees with FTX than a lot of the other brokerages, so you can use more of your money to buy crypto instead of just making your brokerage richer. And right now with FTX, you can trade crypto and NFTs, and soon they'll be adding a feature which will also let you invest in stocks right off of their app. And the best part of all is that they have a promo going on if you use my link down in the description below, and then you enter in the referral code minority, where if you trade $150, they'll also give you $20. So all you have to do is use my link down in the description, enter in the referral code, and make $150 worth of trades, and then you get your $20. Now, kind of ironically, as I was recording this video, I'm taking a step away from the script right now. I found out that BlockFi was sending this email out to some of their affiliate partners, so people that promote BlockFi. And essentially what it says is, hello, BlockFi has been facing issues because, one, of turbulence in the crypto market, and second, because the Fed is raising interest rates, and third, because of inflation. And because of this economic factors, they're now terminating you as their affiliate partner, effective essentially immediately, effective tomorrow. I just found out that this was happening, and I looked a little bit deeper, and it turns out that BlockFi was originally valued at $3 billion last year, and they were raising money at that valuation. Now they're raising money again at a $1 billion valuation. And so you have to think, why would you now raise money for your company at a lower valuation unless you absolutely need it? So again, going back to this exchange thing that I was talking about, to be very vigilant about which exchange that you're using, and then use your exchange as an exchange, not as a place to store your money. Because if an exchange goes under and you've already taken your crypto out, well, it doesn't really affect you. You just go to a different exchange. Second, on the technology side of the actual cryptocurrency and the blockchain, not the exchanges, not the crap coins, but the blockchain behind some of these technologies, we're starting to see a lot more advancement, because originally cryptocurrency was just supposed to be this way for you to send money from one place to the other very effectively and without a lot of friction. And it did accomplish that. You can send money very easily and simply with cryptocurrency, but now we're seeing a lot more advancement in the actual blockchain, the technology behind cryptocurrency, with things like smart contracts. Smart contracts are things where now you can use a cryptocurrency, a blockchain, to now create a contract with somebody else that will create rules that if somebody does not do their part of the contract, then the contract will not do something. Or if they do fulfill their end of the contract, then the contract will do something. Just a hypothetical example of this is I could create a smart contract with a tenant where now you have to pay me, say, $1,000 a month for living in the property. And if you pay me $1,000 a month, then you will have access into the property. It will open up the house. You can get in, do everything in the property. But if you do not pay $1,000 a month, then the locks change, or the locks will lock, and now you can't get into the property. That's just one theoretical example, but these are things that can be built on top of the smart contract, where now you can create these types of if and then statements, where now the cryptocurrency, the blockchain, will allow you to build a contract, and if people act within the contract, certain things will happen, and if they don't act within the contract, other things will happen. Ethereum has been a big leader in this type of blockchain technology, but one of the downfalls with Ethereum is it used a lot of energy. So now you had some people who were talking about climate change, saying that it's using too much energy, and then other people who wanted to use cryptocurrency said that it was very expensive to use Ethereum, and that's why Ethereum has been kind of working to change its technology. One of the things that it used to do was it used to be a proof of work model, meaning that if you wanted to mine or create more Ethereum, you had to use a computer and it needed a lot of time and computing power to produce more Ethereum. Now that's expensive and it used a lot of energy, which was not good for the environment. But now Ethereum is switching to something called a proof of stake model, where now it doesn't need that same type of computing power. You can now stake or sacrifice some of your Ethereum, and instead of mining it the old way, it would validate the Ethereum. All you need to know about what that means is now it's a different way of producing more Ethereum, and it uses less energy and it's less costly to do that. The reason why I'm talking about this today is because this has been a long time coming. The Ethereum developers have been working on this for a very long time, and they just did a test of this new proof of stake model just last week, and it did very well, which is a good sign for Ethereum and that blockchain. Third, let's talk about the actual use of crypto, because anytime we've seen a big boom in crypto prices, whether it was the 2017 boom or the 2020 boom, when we saw these booms, we saw a lot of influx of people wanting to get rich quick from cryptocurrency, and it brought a lot of users into crypto. And then when the crypto markets crashed after that, both times, a lot of people ran away from crypto saying that it's a scam, that it doesn't do anything, and that they're very angry with crypto. But the interesting thing that we see happen after these types of crashes is that the people that wanted to get rich quick run away, they get very angry, but then the people that actually believe in the technology and see the value in the actual blockchain of cryptocurrency come in. And that's where it creates a different use case, because now people who actually believe in it for the long term start buying crypto. Right now, we have right around 30 million Americans that own cryptocurrency, which is significantly higher than where we were 5 years ago or 7 years ago. So we're starting to see more and more people who believe in the long-term value of cryptocurrency. And one thing that I do want to mention here is when you're investing in the cryptocurrencies, obviously do your own research, but understand that if you really want to invest in the technology, just like anything else, you have to be a long-term investor. This is not something you want to hold on to for just 6 months or a year. You want to hold on to this for the long term to really see if the investment works out or not. Is it speculative? Absolutely. Cryptocurrency is just a small piece of my portfolio. It's just my speculative side of my portfolio. So I understand, yeah, it can completely go bust. But I'm also willing to take that risk because I believe in the technology, I believe in the blockchain, and I'm investing in it accordingly. Like my biggest investments are my business market briefs and my startups that I invest in. The second biggest investment are my real estate. My third biggest investment is the stocks that I own. My fourth biggest investment is my crypto, and then I have physical gold. So crypto is only second to gold. And so it's, I understand how it plays a part in my portfolio, and I want you to understand this and understand the risks that do come with crypto and invest accordingly. But what's most interesting about cryptocurrency in its use case, besides just the United States, is what's going on globally, because we're seeing a lot more global adoption of cryptocurrency. Because just think about it, the dollar is, relative to the rest of the currency in the world, is the most stable currency that there is. Now, of course, we have issues here with the dollar, with all the inflation going on. But imagine, if this is the dollar, imagine what's going on with the other less developing countries with the less stable currencies. And so for people in the less developing countries, they've been turning to cryptocurrency as a more stable way for them to hold money and for them to make transactions. And so people who are more worried about their currency have been turning to cryptocurrency because for them, it's a better option. Now, of course, here in the United States, we have the privilege of having the strongest military in the world, the strongest economy in the world, and the strongest currency in the world. However, that's why you're starting to see people in other countries start to adopt crypto for that very reason, because they're worried about their own currencies. Plus, in some of these countries, the banking systems are not that advanced, so it's very difficult for you to transact with their money or their currency. Versus with crypto, it becomes significantly easier because now you have access to a whole different level of technology, because now crypto and this technology can apply worldwide. So what does this all mean? Well, expect a very, very volatile next 12 to 18 months until we really see what's going on with our economy, until we really see what's going on with inflation, and until we really see what the Fed is going to do to fight it. And just make sure you're protecting yourself. Listen to the warnings that I gave you earlier on in this video. If you believe in the cryptocurrency, if you believe in the blockchain, you got to be willing to believe it for the long run. But don't keep your currency, your cryptocurrency, your money in any of the exchanges. Use a wallet to protect yourself and understand what your long-term goals are. If you enjoyed this video and you want to see what 7 investments you should make next time we see a market crash, that way you never have to worry about money again, I made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. Uber, Instagram, WhatsApp, all of these companies were created during a recession.